Hi all, good morning. Welcome to the day 3 session. We have a small leftover topic of yesterday's discussion. We'll proceed with that first and then proceed with this today's discussion. Now, points for our understanding. If you carefully watch our channel will have two thumbnails where it will say CMA final, CSfinal for session 1, which will schedule to be started 10. And post break, another live is scheduled, which will start at 11:45. So just yesterday we had some challenges. To avoid all those challenges, we decided to have two different sessions, which identifiable sessions. Coming back here. Now, on our yesterday's session, yes, we have discussed about levy and followed by reverse charge. In case of reverse charge, we have almost dealt with all types of reverse charge under services. Now, as part of today's discussion, we had two last reverse charges from IGST perspective, which was pending. Those IGST perspective reverse charges, we will take it up first and then discuss about a new amendment which came into effect from 1/4/2019, which will be your reverse charge in terms of 9 subsection 4. Once discussion of the both of these reverse charge, we will conclude the complete reverse charge category and then make a discussion towards composition levy. All this will easily take your time. Our discussions, something to do with on time of supply and value of supply in our session 2. As usual, today's material and questions is also given in the description board as a link, and many people have confirmed me that they have able to download it. I have also personally checked it. Now, points for our discussion is we'll go back to the reverse charges that was pending on yesterday's discussion. Import of service. First of all, the word import of service is defined under section 2 of IGST Act, where import of service is very cleverly worded that the supplier will be located in a non-taxable territory and recipient will be located in taxable territory, followed by place of supply will also be in taxable territory. Something to note over here, the supplier will be located in taxable territory and supplier will be located in non-taxable territory. Recipient and place of supply will be located in taxable territory. Now, points for our consideration or points for our, the respective recipient is liable to pay tax under reverse charge. But of late, a small doubt will come whether all import of service is liable for reverse charge. At this moment, it is also worth to understand and recollect that section 7, subsection 1, clause B of CGST and SGST Act very carefully says import of service either for a business purpose or for a other than business purpose would be treated as a supply. Keeping that in mind, the import of service can be for a business purpose. Import of service can also be for a non-business purpose. That is why when the notification is worded, very clearly the notification says where the services are received by a person other than let me repeat it, other than a non-taxable online recipient. In case of a taxable online recipient, other than a non-taxable online recipient, meaning thereby, in case if it is going to be all those services provided by the supplier located outside India to a recipient in India for a business purpose, then the law Okay. Should be comfortable, I believe. Now, in case of all those import of services, ensure not all all service recipient in India are liable to pay tax. That service recipient has to be a business recipient. Meaning thereby, what do we mean by a business recipient? He is a recipient in India, use these services for the purposes of, let me repeat, then yes, the respective recipient in India is liable to pay tax under reverse charge. Moving forward from this discussion, which we have made notification, or if we carefully see the slide presentation, then yes, you will come across where they will say the points for our discussion is very simple. In case of all those transportation of goods service, let me repeat, all those transportation of goods service by a person located outside India. Just give me. All those transportation service provided by a person located outside India and to a importer in India. In fact, this one entry, transportation of goods by vessel, where the supplier and recipient is outside India, is a tricky entry and had a lot of litigation now itself. For example, more than 10 High Court writ petitions has been filed and writ decisions of various High Court are in favor. Some of them are in favor of revenue, some of them are in favor of IFSC with relation to this particular reverse charge levy. What is this particular reverse charge levy? Can we get into this? Be with me with this example. Probably you'll be able to appreciate the intention behind this reverse charge. It is not a very simple transportation of goods from a place outside India to India. If you think like that, no, it is not like that. It is something different here. For a minute, think, leave all the discussions of GST, get into your customs discussion. Goods can be brought or goods can be imported into India only by two ways, or two, probably I would not say two ways, probably only the largest two methods of operation of pricing. Sometime we will use a word called as FOB, where the goods will be delivered at the foreign place. From there, transportation is taken care by the recipient in India. Sometimes what used to happen is goods will be stationed or goods will be brought into the Indian location itself. How goods will be brought into Indian location? Very simple. Where government comes out CIF basis. What is this CIF basis? Cost including insurance and freight. Goods will be brought into the Indian territory. Now the question which need to be discussed by us, or the question that is very important to us, is this. In case of your transportation of goods by vessel, exporter is in foreign country, exporter is a ship. That ship company is located in foreign country. That ship, the exporter and importer, who is going to deal with goods. I am more bothered about a Japanese exporter exporting the goods from Japan to India by using the services of a Korean ship, HMM, a ship. This ship carries goods from Japan to India, with foreign ship, to a exporter who is again a foreigner, Japanese person. However, these services are going to reach India, or the goods destinated to India. In this case, supplier of services, that is the shipping liner, is located in a non-taxable territory. The exporter, who is going to be the recipient, again he is also located in non-taxable territory. Government told importer, you are the beneficiary of this transaction. You are liable to pay tax under reverse charge. In case of all those transportation of goods by vessel, when a foreign ship carry goods for and on behalf of an exporter located in foreign country to India, then the respective Indian importer is liable to pay tax under reverse charge. These are some important points from the perspective of this reverse charge. So if you carefully note here, supplier is also located in non-taxable territory, which is in our example, the ship liner HMM located in Korea. Again, the exporter is also located in non-taxable territory, who in fact paid that $700 for exporting a container to India. The Indian importer who bought the goods on CIF basis, then that Indian importer is the beneficiary. That Indian importer is liable to pay tax under reverse charge. When our background discussions are going to be like this, often some of us can immediately say, sir, we are paying customs duty for freight, ocean freight also in customs. I agree with you. This point was put forth before various high courts too. Is it not 2 times taxed or it is not dually taxed? The purpose or valuation mechanism is different. So the law makes things very clear that it would be included. So the points for our discussion today, at least from an academic exam perspective, don't be much bothered about whether it will be whether I on their best interpretations. However, from an exam perspective, if you see an import of goods on CIF basis, this is the key term. If you see an import of goods on CIF basis, then the importer in India is liable to pay tax under reverse charge for this transportation of goods by vessel, both where the service provider and service recipient are located in non-taxable territory. This sums up our whole discussion on various services under reverse charge under section 9.3, and this takes us to the next important reverse charge under section 9.4. I am sure a lot of you are all aware that from 1 to 2019, that is from 1st February 2019, from 1st February 2019, the government has amended section 9 subsection 4 and section 5 subsection 4 of CGST Act and IGST Act to ensure that a notified class of person and a notified services alone liable for reverse charge. Recollect our yesterday's discussion. In yesterday's discussion, when we discussed about reverse charge, we highlighted that 9 subsection 4 is applicable not universally. The person should also be specified. Then only that special reverse charge 9 subsection 4 is applicable. At this moment, I also want you to highlight that prior to this amendment in the Act itself, that is prior to 1 to 2019, from 13th of October 2017 to 31st July, exemption was given for 9.4 reverse charge. After that, it was completely modified in February 2019, and a new entry was passed with the help of a notification. Notification number 7 of 2019, which came into effect from 1st of April 2019. Maybe if you've been referring through these slides, on the completion of, after all those reverse charge, a particular slide will talk about reverse charge on construction projects. The notified category person here is a person called as promoter or and sell. Then this person is liable for a particular reverse charge. That is to say, this reverse charge under section 9.4 is applicable only for construction industry. Let me repeat it. This is not applicable for other industries. Some of you are all finding it difficult. I could able to see some data metrics from here. we would recommend you to, if in case your videos are all buffering, as usual, you go back 2-3 minutes later, and if you go 2-3 minutes behind as compared to the right, I think the buffering will get set. And again, when it comes to your viewing, try to view as small as possible. In fact, I myself is streaming it in a very a very small version. So if you see that, it would be possible. If you able to know how to change your ratio of pixel, yes, on the right hand side corner there will be a small settings. You can change or reduce the pixel so that the clarity, nothing is here. As usual, we have to see our faces only for last next at least 2 hours or so. Coming back here, this 9 subsection 4 reverse charge is a very particular reverse charge, applicable only for, let me repeat, applicable only for construction industry. For others, this reverse charge is not applicable. So, points for our discussion is this. In case of those reverse charge, law says, have you completed the project? If the answer is yes, and in this completion of project, you would have purchased various goods, you would have purchased various services, and a restriction is placed that minimum 80% of the goods or services should be purchased from only registered person. Now let's take up an example. A project commenced on 2019. It is executed during 2019. It was also executed during 2020, and a fag end of 2020, they have completed. And from their costing records or from their project-wise records, they could able to know what is the cost of project. If I say cost of project, almost all cost will be, but for all these costs, rest all costs. Now break it into 2 categories. That goods or services purchased from registered person, that goods or services purchased from unregistered person. The ratio between registered and unregistered person should be 80-20. That is to say, goods should be purchased 80%, then yes, it would be treated as a compliance. In case if an SSE has purchased goods and services together only 68%. I'll give you an example. The cost of construction of a particular project of constructing 6 flats came up to a builder, let's say 1 crore rupee. Of this 1 crore rupee of salaries, when I reduce all this, it came up to another, let's say 40 lakhs. On the balance 60 lakhs, now 60 lakhs is the cost of the project which is relevant goods and services procured. Of this 60 lakhs, 80% of this goods or services should be purchased from a registered person. Let me repeat it. Entry from CMA final perspective, from CAfinal perspective, possibility of being tested is a lot more high on this topic. So points for our discussion here is, arrive the cost of the project, multiply into 18%, reduce the purchases of goods and services from unregistered person, you will get a gap which is yet to be satisfied or a shortfall in compliance. That shortfall in compliance will be leviable to GST, and the promoter has to pay GST on this under reverse charge. A very careful entry. It will not be done every year. It will be done only on the year in which project is completed. How I can know the project is completed? You can know the project is completed. You can know the project is completed by getting when in case of properties which are all require a completion certificate from a local authority. Yes, you'll get a completion certificate. That completion certificate might help sometime. Sometime those kind of completion certificate will not be available. At that time, there is something called as occupancy certificate. The first time a property was occupied. So that decides that reverse charge, a little important reverse charge. In fact, that is the reason why I have posted it to today's session. Followed by, in case if a promoter purchase cement or capital goods from an unregistered person, then yes, the respective promoter is liable to pay tax under reverse charge. From a CMA student perspective, kindly remember for the shortfall, rate of tax is 18%. For the cement purchased, rate of tax is 28%. For the capital goods, the respective rate of tax for the capital goods would be applicable. Now, from other courses, rates will be generally given, but for CMA, yes, the rates will not be given. People have to remember it. Coming back here, getting into different types of goods which are liable to reverse charge. Sir, we already read, we know no cashew nut, BD leaf, tendu leaf, all this and all. Correct? But there are some finer understandings that need to be understood by us. What are those finer understandings? Now, when it comes to those discussion, all those finer understandings is concerned. In case of cashew nut or BD leaf, or it is going to be your tobacco or raw cotton, the supplier should be an agriculturist. Let me repeat, that is agriculturist, and the recipient is going to be a registered person. 1 month, some buffering issues. If the supplier is an agriculturist, cashew nut is supplied by an agriculturist. Tobacco, BD leaves is supplied by an agriculturist. Or tendu leaf is supplied by an agriculturist. Raw cotton is supplied by an agriculturist. Supplier has to be an agriculturist. Recipient has to be a registered person. Goods has to be that specified goods. If all these conditions are satisfied, then yes, the respective recipient is liable to pay tax under reverse charge. I'll give you an example associated with this. For a moment, understand. In case of your, for a moment, come on, understand. In case of agriculturist gives his cotton, which he has produced from his field, this cotton is given to a trader who is going to trade in cotton. Then the respective trader who purchased from the agriculturist, that trader is liable to pay tax under reverse charge. Sometimes in exams and sometimes in practice, we will have special situations where Mr. A trader in cotton, who sell to Mr. B, who is again a trader in cotton. Very interesting to note. Mr. A trader, is a small-time trader. He is not registered with GST. Mr. B is a big-time trader. He is registered with the GST. At that time, kindly refer back to the notification. The notification very clearly says that supplier has to be an unregistered person. So, reverse charge will not be applicable. I just want you to highlight only one aspect, that your supplier should be an agriculturist. Then only you can comfortably say, in case of cashew nut, BD yarn, let me repeat it, silk yarn, and he is the processor of it. In the cocoon, he does manufacturing of silk. Then the respective recipient, being a registered person, is liable to pay tax under reverse charge. We'll take up an example for discussion. This time we have a weaver. The weaver procured the silk yarn from the sericulture fellow, also procured the threads, fabric, not fabric, all those threads from the market, using the process of weaving machinery that he has, made a beautiful silk saree and sold it to some of those showrooms in T Nagar and Purushavatham. Question before us is very simple. In case of, let me repeat, in case of all these organizations, kindly make a note that these people are giving silk saree. Now, silk saree and all is not covered under reverse charge. Raw silk. That too, who has to give to whom? The person who manufactured it has to give it to whom. Let me repeat it. For an earlier level, an expert knowledge is required on each of these entry. Ensure you take care of all these aspects associated with it. Union territory or so on and so forth. And recipient is going to be all those lottery distributor. The respective recipient is liable to pay tax under reverse charge. Similarly, all those goods confiscated by government or all those goods which are sold by the government on some public auction mode to various people. Now, a genuine doubt came, who is liable to pay GST? Whether government, be it a central government, state government or union territory, or the respective registered person. If you carefully note, the government department which is discarding the waste and scrap, the government department which is selling the seized goods, the government department which is selling the used vehicle, they are the suppliers, and people who buy on e-auction or public auction, they are all recipients. In a background like this or in a model like this, law makes itself very clear that in case of all those transactions, in case of all those people, where law comes out and says that the respective recipient is liable to pay tax under reverse charge, meaning thereby a person in Chennai airport has smuggled gold. Let's say a person has smuggled 10 kgs of gold, and that person will be taken under custody by the customs department. A case will be filed. All that is different. I'm not getting into that part of procedures of customs at all. The gold that is seized by the customs department, what customs department will do is they will sell the gold on public auction. Now, that is a seized goods. Why they have to sell? Very simple. They have to sell the gold, collect the money, and adjust with this duty and penalty payable because he has did a fraudulent transaction, a smuggling transaction. When they sell the gold, now a genuine doubt came whether the customs department is liable to pay GST or the buyer of the goods liable to pay GST. Government amended their existing reverse charge notification and made a point very clearly. Respective recipients are liable to pay tax under reverse charge. A unique certificate sold with the help of RBI, a certificate called as PSL. So think about it. See, every bank has been controlled by RBI. RBI often gives instructions to bank to give certain priority to certain sectors. That is to say, of your total loans given, give 10% for education purposes, give 15% for agricultural purposes. But some of the bank, preferably some of the commercial banks, will find it difficult to comply with it because of a very simple reason. When they lend it to some of those priority sectors, the recoverability of this is very difficult. To the contrary, some of the state government owned or cooperative banks will be part of cooperative bank, which will be lending to majority of the agriculturists. If you look the lending profile of these companies, if they lent 80 crores, then more than 70 crores they would have lent it for agricultural purposes. Now, what is more important to us is these bank, government says you lend only 15% sufficient, but they have lent, let's say 80%. Now, that excess percentage, 65% that they have said, that they have, the different 65 percentage that they have excess funded loan, that portion of loan will be purchased. Sir, you are trying to say something, but we are not able to understand. If you follow, Yes, because it's the first time. If you're not aware of what is PSLC, it will be difficult only. Now, understand like this. CA Institute, CMA Institute, CS Institute says that never be happening in institutes, our institutes at least like this. All three institutes is very clear. For a hypothetical situation, a friend pursued, let's say, article of 1.5 years, and he requires only 6 months. That balance 1 year excess he work, no. He can assign that article to you through a certificate. It will be deemed that you did article. This and all is too much. That's why I told. That is what. He assigns you through a certificate. No. That certificate is called as your article transfer certificate. Similarly, I assign through my loan to you through a certificate called as PSLC certificate. Will your friend assign it to you at free of cost or after collecting money? If you think he will assign it to you at what? After collecting some money, then yes, it would be treated as a supply of services. Coming back here, these kind of loan transfer certificates would be treated as a money additional income to these small banks, which will be mediated by RBI. Respective recipient who pay and buy the certificate will be treated as a recipient liable to pay tax under reverse charge. This sums up our whole discussion on reverse charge. Let me repeat it. One of your important topic. How much ever we discuss, this topic is so much worthful. Minute point. Sometimes they use the word business entity. Sometimes they use the word registered person. Sometimes they use a word taxable person. Sometimes they use a word person. Sometimes they specify the person. With all these importance, we have to remember and ensure we carefully analyze all those transactions when it comes to reverse charge. Let's make a next discussion on composition levy scheme. Composition levy. We have the composition levy. As far as composition levy is concerned, Section 10 of CGST Act and SGST Act discuss about composition levy. Let me repeat it. One of a very important entry from this attempt perspective. I would say why, because see, this is one entry which has been continuously amended from 2017, 18, 19, 20. This budget also you have amendment. Let me repeat. They are correcting the act itself. They want to fine tune because originally limit was different. Originally it was 50 lakh, then extended to 75 lakhs, then extended to 1 crore, then extended to 1.5 crores. Now what is the limit? All that we will discuss. But understand why this scheme. See, everybody's contribution is required for the development of this country. And you cannot neglect somebody because they are small player. I'm not sure. If you go back and analyze some statistics of number of assessees, number of people who file return, you'll be surprised to know some facts. Just for your information, on 130 crore approx country, because last census says 120 crores. By last census to this census, we would have, had a population would have increased by 10 crores. On 130 crore country, any rough guess how many people will file return? If you go back and think, a very, very small percentage of people file return. It has its own reasons why. I am not finding fault with that. Understand there is a logic behind the number of assessees being less. But point that I want to drive home is number of assessees who earn less than 10 lakh rupee income is very, very less. And a trader to make a 10 lakh rupee income, he has to do a minimum sales of at least 1 crore rupee. Let me repeat it. 1 crore rupee is not profit. 10 lakh rupees is profit. To make a 10 lakh rupee, government wanted to protect the interest of small and tiny player. Let me repeat. I would not even say mid-term player. Small and tiny player or micro player. Tiny, micro, small players. As these players should also contribute for the development of country with lot of restrictions. Let me repeat. I would not say with it's an option with lot of restrictions which can be satisfied only by a tiny and a small time player who is located in our rural area, suburban area, tier 1 area, tier 2 area. Now these people are given this option. What is this option? Section 10, subsection 1 comes out and says, if a person who deals with goods and his turnover is going to be less than 150 lakhs, then yes, that person is eligible for composition levy. If a person's aggregate turnover is going to be less than 150 lakhs, then yes, that person is eligible for making or eligible to make or come under composition levy. Now, is the only criterion? If you go back and think, no, there are a lot more criterions. Now, any person whose previous year aggregate turnover. I think we have already discussed this word aggregate turnover. Let's repeat it again. As per section 2 subsection 6, aggregate turnover means it will include your taxable supply, exempted supply, zero rated supply, and supplies which are not leviable to GST, popularly called as non-taxable supply, computed on all in. Now, this number is called as aggregate turnover. So, if a organization's previous year turnover does not exceed 150 lakhs, then yes, they are eligible for composition levy and they can pay GST not at a regular rate, not at a normal rate. Normal rate of tax is 5, 12, 18, 28. That is your normal rate of tax. However, they are liable to pay tax at a highly subsidized rate, which is being mentioned in the section, however, which will be notified by the government. A notified rate is there, which we will take it up later. Now, this option can be exercised by a company if they want only. It is not mandatory. Similarly, that person who want to claim this composition levy, he should not be engaged in, not be engaged in supply of goods which are not leviable to GST. Or in a positive affirmation, he should be engaged only in goods which are leviable to GST. Meaning thereby, if he deals in goods or if he deals with some supplies, that supply should be leviable to GST. That is to say, if a person is going to deal with petrol, diesel and oils, greasers, can he offer composition levy? First of all, he will be eligible is the first question mark. Assuming his turnover is less than 150 lakhs, assuming that, will he be eligible if you check? Answer is no, because petrol or diesel is not leviable to GST. The goods held by the person should be leviable to GST. Suddenly a doubt will get arisen in our mind. Sir, what would happen if a person deal with both taxable goods and exempted goods? Come on, word used is leviable. Whether exempted goods is leviable to GST, the answer is yes. If there is a levy, only you can exempt it. If there is no levy, it cannot be exempted. Understand this fundamental understanding, because it would help you later in our ITC also. And points for our discussion here is, the moment a goods is not leviable to GST, meaning thereby only two goods, petroleum products and liquor. If this goods is not leviable to GST, if they deal with this goods, they are not eligible for composition levy. Similarly, the supplier should be engaged only in one supply of food. Now, points for our discussion is the supplier should be engaged only in one supply of service, which is of food. Now, in this case, if anybody who is engaged in any other services, then yes, they are not eligible for composition levy. This immediately a doubt will come. No, now we were been discussing about services. We will take up about services sometime later. We will take up about sometime later. Now, the supplier should not be engaged in any services other than supply of food. Then only he is eligible. Similarly, he should not be engaged in interstate outward supply. In other words, that person who want to go to this composition scheme, he should not sell goods to people located in another state. Meaning thereby, a small tiny kirana shop person or all those small shopkeepers who are all in nearby your area, they would be entitled for all these all these options. And one of their conditions located in Andhra Pradesh, I will sell goods to a person located in Kerala, Karnataka. I am sorry, they would not be entitled. Let me repeat, they will not be entitled. He should not be engaged in supply of goods through e-commerce operator. Let me repeat it. He should not be engaged in supply of goods through e-commerce operator, meaning thereby he will not sell goods through whom? E-commerce operator. Then only he is eligible. Now, points for our discussion on all these aspects is very simple. In case of all these transactions, if a person satisfies all these conditions, then only he is entitled for composition levy. If you ask me, is the conditions are over? No. We'll just revise it and then once again take forward. Previous year turnover should not be more than 150 lakhs. Previous year aggregate turnover should not be more than 150 lakhs. Followed by your second condition, he should not be engaged in all those goods which are not leviable to GST. Third, he should be engaged only in one service, supply of goods. Then followed by, he should not be supplying goods through e-commerce operator. If all these conditions, followed by, he should not manufacture notified goods. Sir, what are all notified goods? If you ask, chewing tobacco, all tobacco products are ineligible for composition levy. Very recently, they have also added aerated water. Aerated water means all those drinking water. Why? Don't ask me. A law composition levy, you will pay a low rate of tax. You all know that is the reason. Ice cream and aerated water, profit margin is high. That's all. Nothing greater. The drinking water which we buy for 20 rupees outside in the market, 1 liter outside in the market, the core cost of manufacturing the drinking water is less than rupees 3. I have been told the cost largely is the plant cost and the transportation cost, dealer margin, so on and so forth. The core cost of making the product is very less. If they allow composition levy, many people will start misusing it. That might be the intention of the government to exclude. Now, in any case, this 4 or 5 goods manufacturer is not eligible for composition levy. Followed by, in case of multi-GSTN registered person. How it is possible, sir? Maybe possible. A person will have a garment business in Andhra Pradesh and a hardware business in Tamil Nadu. Both are proprietary business. Then, for both the business, he should opt composition levy. There cannot be a situation for garment business, I will opt composition levy. For hardware business, I will go under normal section. Pan India, for a same pan, let me repeat, condition. As usual, a composition levy person is not eligible to claim input tax credit and he cannot collect tax separately. If all these conditions that I have listed out are satisfied. As of now, 9 conditions I have listed. So 9 conditions, sir. Yes. Previous year aggregate turnover should not be more than 150 lakhs. He should be engaged in only supply of goods which are leviable to tax under GST. He should be engaged only in supply of services which are going to be in supply of food. Fourth, he should not be engaged in intrastate outward supply. Fifth, it is going to be e-commerce. He should not supply goods through e-commerce operator. He should not manufacture notified goods such as pan masala, gudka, tobacco, aerated water. 7, he should not, if in case he has a multiple GST registration, all the units, all the multiple GST registration, he should opt for composition levy. 8, he is not eligible to collect tax from his customer. 9, he is not eligible to claim ITC. 2 more conditions are there which comes from the rule. This scheme is not eligible for a composition taxable person, casual taxable person and non-resident taxable person. Last but class, we defined this, but last class introduction also, we had the definition of this term. Non-resident taxable person, casual taxable person cannot opt composition levy, followed by last condition. He should issue, more importantly, in every document, everything he says, he should be a composition person. If a person satisfy all these conditions I told, then he can opt for this scheme. What is the advantage of opting this scheme, sir? Rule 7 of your CGST rules, read along with section 10 subsection 1. Section 10 subsection 1, read along with rule 7 of CGST rules, comes out and says the composition rate in case of manufacturer will be 0.5% CGST, 0.5% SGST. In case of all those persons supplying food, it will be 2.5% CGST, 2.5% SGST. In case of all other suppliers, other than manufacturer, other than supply of food, technically what? Traders. In case of traders, kindly taxable turnover. Now, what is the difference between manufacturer and other suppliers, if you keenly note? In case of manufacturer, it is 0.5% on exempted goods plus taxable goods, which is its total turnover. When it comes to taxable goods only, exempted goods, other supplier is not liable to pay tax, is one of the relaxation came during 2018. So the point that I want to drive home is, now you will understand why so much condition. If somebody satisfies all these conditions, then he can pay taxes at a throwaway rate of 1%. Understand? A particular cosmetic item is sold for 18% in a particular supermarket, then the nearby Kirana shop fellow next to your house can pay only 1%. Where is 18%? Where is 1%? Think. Again, I do understand, sir, they are ITC eligible, here ITC not eligible. That and all is there. That and all always we can speak. But understand, this is an optional scheme. If an assessee want to opt, let him opt. If the assessee is not interested in opting for it, let him not opt for it. But this option is only applicable if somebody satisfies these conditions. How to comply with it? That is discussed from rule 3, 4, 5, 6, 7. Of course, 8 and 9. All these rules discuss about the compliance, the procedure 3 days. It's a one-time application. Until he come out of the scheme, that application is valid. Sir, I'm not able to follow, sir. See, not like erstwhile laws. Erstwhile laws had a different aspects. In the erstwhile laws, we used to, in the erstwhile laws, we used to make all this composition levy applications on a yearly basis. However, under GST, once you file a CMP02 at the start of the year, then yes, that person, if he is eligible, he satisfy all the condition, then yes, that person will be a composition levy person. And until he ceases to be a composition levy person, he'll be continued there. Sometimes during the year, if some new company comes in, during the year, if some levy, at the time of registration itself, they have to opt for composition levy. The point finally that I want to drive home here is, if they miss the bus at the start of the financial year, during the financial year, a person cannot opt for composition levy. He has to make application at the start of a particular financial year if you want to opt for composition levy. Form number is Form GST CMP02, which need to be filed within 60 days from the start of the financial year. And he need to declare about his stock information within 90 days of opting composition levy. He has to file a form called as CMP03. If he has some stock and he need to reverse some ITC associated with it, when we go to input tax credit, section 18 will discuss about it. Stock declaration alone he has to give in a form called as CMP03. In case a person during the year ceases to be a composition levy person. How a person during the year can cease to be a composition levy person? Very simple. When a person whose turnover during the year crosses 150 crores, a person during the year sell goods to another person, to another person located in different state. During the year, a person supplies some services to a person, supply some services other than supply of food. Very simple. If a person violate the above 11 condition, he will cease to be a composition levy person with immediate effect. It's not Ganesh Prabhu's view. It is the view of section 10, subsection 3. Section 10 to be a composition levy person, then yes, he is thrown out of the scheme with immediate effect, and more importantly, within the next 7 days, he has to file a form called as CMP04. CMP04 is a form that will be filed by a person who ceases to be a composition levy person. Sir, if I cease to be a composition levy, he will pay tax at the regular rate of tax. Composition levy is a conditional option. If somebody is satisfied, then yes, they are eligible to claim this composition. Now, sometimes at the time of assessment, or as part of inspection, or as part of regular scrutiny of return, government might take up cases for reviews. During the review, government is of a view a person has claimed composition levy, but actually he is not eligible for composition levy. At that time, government will issue a show cause notice in a form called as CMPZ within 15 days from the date of receipt of notice in a form called as CMP06. From the day in which we submit the reply, within next 30 days, an order will be passed under form CMP07. Often, these are all procedural aspects. Let me repeat it. When you start yourself getting involved in some of these procedures, it would be interesting to you. Now, you will find what is this 1, 2, 3, 4, 5, 6, 7, 8, all nuisance. You'll feel it, but nothing can be done about it. So, don't feel it. So, come back here. CMP02 for making an application for opting the scheme. CMP03 stock declaration. CMP04 if a person ceases to be a composition person, he will file. CMP05 in case of show cause notice issued by an officer. CMP06 is reply to the show cause notice. Reply to the show cause notice should happen within 15 days from the date of issue of notice. In case of CMP07, it is going to be an order issued by the officer after submission of reply, which has to happen within 30 days from the day in which reply is submitted. So these are all time-bound activity. It should all happen in this process only. Coming back here, Very recently, one more form was notified, CMP08. What is this CMP08? From 1/4/2019, let me repeat, from 1/4/2019, every composition person at the end of the quarter, instead of filing his usual GSTR4 return, shall make a statement evidencing payment of tax in a form called as CMP08, which is a new form introduced here. CMP08 is a simple payment of taxes form. Earlier, little detailed GSTR4 will be filed. So what will happen to GSTR4, sir? Nothing. Earlier, which was a quarterly return, from 1/4/2019, it became a annual return. That is to say, after filing the March return, after filing the March CMP08 statement, they will file a return called as GSTR4 before 30 days. Sir, I'm not able to follow these amendments. Very simple. Recollect your earlier understanding. April to June will be over. Once June is over, before 18th of July, GSTR4 will be filed. This was the old procedure. Now, to ease this process, GSTR4 asked for a lot more information. Small and tiny businessman told, sir, what we are giving our sale value and we are paying tax. For that, you want me to fill a 4-page form. Can't you simplify it? In the process of ease of doing business, government came up with a simple statement. CMP08, tax payment statement. In fact, all those amendments are brought in a different slide. If you get into that slide, you'll be able to appreciate it more carefully. A form CMP08, a quarterly payment statement. If I am a manufacturer, I have manufactured goods so much. If he is a supplier of food, he will say, I have supplied food so much. He is a trader, he will say, my taxable goods so much, exempted goods so much. Tax will be calculated only on taxable goods for a trader. For a manufacturer and a supplier of food, on the entire value, tax will be calculated. Tax rate also prefixed, 0.5% CGST, 0.5% SGST for manufacturer, 2.5% for supplier of food. Again, 0.5% for your trader, only on taxable value. Once that computation is automatically done, taxes will be paid and filed. So this CMP08 is a new statement that is introduced or that is notified by the. We have to take note of certain 2 or 3 important discussions. Of that, this first important discussion. In case of a specified state, let me repeat it. In case of a special category state or a specified state. In case of a specified state, the turnover limit will not be 150 lakhs. The turnover limit will be 75 lakhs. That is to say, recollected for majority of them, the threshold for registration is 10 lakhs. It is not 20 lakhs like other states and states like Tamil Nadu, Andhra Pradesh, Karnataka. So, because their threshold is itself is 10 lakhs, they told 150 lakhs and all composition lists, they have notified that turnover limit will be 75 lakhs. Are there any changes in the special category states? Yes. Uttarakhand was all along was in that 150 lakhs bracket. Now Uttarakhand gets into that 75 lakh bracket. All along Assam was in 75 lakhs bracket. Assam came out of the 75 lakhs bracket. And Himachal Pradesh also came out of the 75 lakhs bracket. As of now, Arunachal Pradesh, Manipur, Tripura, Meghalaya, Mizoram, Nagaland, Sikkim, and Uttarakhand, which came new. Earlier, we had Assam and Himachal Pradesh was in. Today, Assam is out, Himachal Pradesh is out, J&K is out. Of course, J&K, Leh Ladakh, no, those are all out. For these people, which I have told, a list. For these people alone, 75 lakhs is there. By only humble submission, you have to read and remember it. Because from an exam perspective, someone can test you on whether these understandings of lesser states or not. Now, coming back here, moving forward from all these aspects of special discussion, yet another special discussion is a small relaxation came again during 1st February 2019. Earlier it was through notification, later it came through Act itself. That is, any person who opt composition levy and to whichever is higher. What has happened is, sometimes though there are small traders, the traders used to get some small servicing. I'll give you a live example. We had a person or a small time client who was providing the or who was engaged in the business of buying and selling of motors. He buys all those HVLV motor and sell. You don't know this motor pump set and all that only. This motors he buy and sell, and he is interested to pay tax under composition levy because by and large he deals only with agriculturists or unregistered guys. So there is no assessee. What has happened was, he was also engaging in an activity of, if you go back and check as per section 10 subsection 1, will he be eligible for the turnover limit? Yes, he is eligible. But the third limb of the condition will come out and say that in case of people who want to opt the scheme, they should not be engaged in any services. Look at that word. Any services. They should not be engaged in any services other than supply of food. This fellow is not dealing with food. This fellow is dealing with repair and maintenance services of motor. And that's not a big income for him. So, technically for the year 17-18, he was not eligible to opt for composition. Next part of the year, a small amendment which we are referring now came, and that amendment came out and told you can do a service income up to rupees 5 lakh or 10% of value of supply. Look at the beauty. 5 lakhs or 10% of value of supply. He was engaging in his value of turnover was 72 lakhs. 72 lakhs into 10%, which is going to be 7.2 lakhs. 5 lakh or 7.2 lakhs, whichever is what? Higher. This fellow was actually getting an income of only 6 lakhs. Law allows 5 lakhs or 7.2 lakhs. Of this two, whichever is higher, he would be entitled to claim this composition levy. A welcoming amendment. Yet another important point for discussion could be all those yet another important point for amendment could be all those discussions on all those discussion on your interest. See, come on, understand. There were days where people were threatened because I would be a small trader doing a turnover of 30 lakhs, and because doing the business for last 20 years, I have some 5 lakh rupees deposit in bank. That 5 lakh rupees deposit fetched me an interest of 40,000 rupees. Because of receipt of this 40,000, am I engaged in a supply of service? A doubt came to your turnover for the state. Meaning thereby, though somebody earn interest income for the purpose of composition levy, for the purpose of composition levy's aggregate turnover, it will not be included. So these are all the major takeaways of section 10. Mark my word, that 10% service sector, interest, new changes in your turnover, CMP 08 and GSTR 5. I have brought in all these latest amendment in a particular slide and flagged it as latest amendment. That slide becomes important. You can be already tested. From CAfinal perspective, 10% was again CMA also it is already tested. Now, these are all important amendments in composition levy, and this sums up the first part of composition levy from the perspective of composition levy of a dealer who deals to brother something. the younger brother or younger sister would always crib about it and ask the parents, they also want like that. Because a composition levy for small and tiny small and tiny businesses of goods is given, a demanding requirement from the small and tiny industry of service sector was behind the government. And government was gracious enough to understand that there also exists a small and tiny service sector. I am not talking of from a professional perspective. I am not talking of from a renting of immovable property, those perspectives. Those services also covered. But point here is, think of some small-time security services, manpower supply services. They all might have some 20% margin. That's all. If they do a turnover of 50 lakh rupees, they might maximum lend up with their own cost, putting it together, some 8 to 10 lakhs margin. Government told, whatever conditions, only one rider, this service sector, this service sector, aggregate turnover, previous year aggregate turnover will be less than 50 lakhs. That is to say, if a person is engaged in supply of services and he is not covered by section 10 subsection 1, that is to say, he is not a manufacturer, he is not a person dealing in supply of food services or restaurant services, he is not a trader. Other than these three people, all people will be covered under this composition levy, which is 10 subsection 2 capital A. Prior to 1/4/2019, this was covered by a notification. Now it is forming part of your act itself. From 1/1/2020, this forms part of the act. 10(2)A forms part of the act from 1/1/2020. Prior to that, notification 2/2019 of CGST discussed about it. Points for our discussion here is, when a service provider whose previous year aggregate turnover does not exceed 50 lakhs and he is not covered by section 10 subsection 1 and he is not engaged in non-taxable supply, he is not engaged in interstate outward supply, he is not supplying goods, or he is not a casual taxable person and non-registered taxable person, he is not going to supply goods or engaged in manufacture of notified goods, he is not going to supply goods through e-commerce operator, and he is not eligible to take input tax credit, he should not collect taxes, he should not collect taxes from others. When all these conditions are satisfied, then yes, that service provider is liable to pay a composition rate of tax for services, which is 3% CGST and 3% SGST. So, all of you, I request you to remember the rates when it comes to composition levy. Though rates is not applicable for CAfinal, generally rates of goods and services, there is an exception to that provision in the syllabus. Composition rates will be tested in exam. That you need to remember. So coming back here, points for our discussion. In case of this composition levy, yes, service provider should check who and all will be applicable. It could be a small, sparse. You can think of somebody who is engaged in certain manpower supply services, consultancy services. They can be eligible here. So only one point here. They should ensure all these conditions are satisfied. Before we wind up for the section 1, a very, very important point of section 10. Often this doubt will come. Whether a person who is opting composition levy, is he liable for reverse charge? A very, very serious question and tested in exam twice till now. 1. Be it section 10, subsection 2, capital A, very clearly words, notwithstanding anything contained in section 9, but subject to section 9.3 and 9.4. That is to say, if a person is a composition levy person, Definitely, if you pay some money to advocate, if you pay some money to some freight, if you pay some money to security, if you pay some money to rent a cab, then yes, he is liable to pay tax under reverse charge. Some of us are in that notion that in case of your composition levy person, reverse charge is not applicable. Reverse charge is applicable only for normal levy person. No, reverse charge levy is a common levy. If you are a normal levy person also, it will be applicable, or you are going to be a composition levy person also, it will be applicable. It is a neutral levy. If you want, you can also refer to the slides. We have highlighted wherever possible that 9.3 and 9.4 are subject to section 10. So definitely person who is a composition levy person, he is liable to get, or he has to get himself complied for reverse charge. So these are all your discussions relating to composition levy. And we'll do one thing. We'll quickly take up the questions relating to our previous day's discussion. Just give me. Day 2, we have some. We have few questions on composition levy. Other questions I'll take it up in the next session. Don't be much bothered about it. Question number 4 on your day 2 material. Day 2 question material on that question number 4. As a small business, a registered person in Karnataka has opted to avail the benefit of composition scheme. They have furnished the following details for the tax period 39-2019. Taxable turnover of goods 65 lakhs, exempted turnover of the goods 20 lakhs, total turnover 85 lakhs. Using the above information, calculate GST. Need not be bifurcated between CGST and SGST to be paid by the firm for the tax period ending 39-2019. For a particular tax period, they have been asked, if Mr. Small Business and Sons is a manufacturer, what will be your tax liability? If Small Businesses and Sons is a trader, what will be a tax liability? I think it's pretty easy. Now, they are testing us straight away on Rule 7 of CMA. In case of composition scheme person, if he is a manufacturer, he will be liable to pay 0.5% CGST, 0.5% SGST. Though the question does not require or demand us, he will continue in that mode itself. 0.5% CGST, 0.5% SGST, and you will calculate on 65 lakhs. And in case as a small business and son is a trader, you will calculate on what? 65, 20, 85, none of the above. We'll calculate on, yes, not on 20, 65. So coming back here, 65 into 1%. So you have to refer to Rule 7. You have to say this is the tax rates applicable if it's a manufacturer and trader, and then close this problem. Coming back here, PR and Co Associates, a firm of company secretary in Delhi, eligible for composition scheme. I think the question is pretty easy. Service providers are eligible for composition scheme. Professional firms are eligible for composition scheme. No doubts about it. But point to be noted down over here is, in case of all these professional firms, their turnover has to be less than, no doubt, but 50 lakhs. Here the turnover is more than 50 lakhs. They are not eligible. Question number 6. Ram Enterprise has 2 registered place of business. One in Delhi, 2 registered place of business in Delhi. Its aggregate turnover for the preceding year for both the place of business were 120 lakhs. Other place they want to opt composition levy. You are required to advise Ram Enterprises whether he can go for or whether he can do so. One option normal levy, another option composition levy. Is it possible one of the conditions of section 10 is section 10 of CGST both the GSTNs only under composition levy. A situation like this not possible. 6A, a person availing composition scheme in Haryana during the financial year seizes the turnover limit of 1 point subsection 3, if you want to quote. As per the moment a person crosses that 1.5 crores turnover in a year, he ceases to be a composition levy person from immediate effect. And he has to file a form called as CMP, yes, CMP 04 within 7 days from the day in which he ceases to be a composition person. So the points for our discussion is, this is how questions will be worded. Take care of it. These are all some small sample questions. We will take it up in our next session end. Now we'll do one thing. We'll come out of this live stream. As I earlier mentioned, some of you have joined late. Henceforth, we'll have 2 sessions where one session will start at morning 10, end by 11:30, so on and so forth. For certain administrative purposes, because bandwidth, data, storing, all has its own technology challenges, and I'm a person who understand very little technology, or I'll rephrase it, trying to understand technology. Okay, so as of now, temporarily a small bye-bye. After 10 minutes, at 11:50, we will come with your session 2 streaming. You can come out of this stream and give your like over there so that you can say. I would recommend all of you, if you have any doubts, as usual, the comment box is there. You can put on the comment box your doubt. I'll ask my team people to share it to me, and I'll ensure it has been replied to all of us. Thank you all for viewing. We'll come back on live stream in 10 minutes in session 2. Thank you.